Hello and welcome to this video today. So I want to use this video to uh, break further down for you the explanation or to help you understand further or better the use of the trend lines. So now this is a tool. It's an automated tool, more like we call it SF Trendlines. So it helps to plot the trend lines on your chart automatically. So as price is dynamic, this one is also dynamic. So I'm going to use it to show you the primary, secondary, and the minor trends. All right, so let's quickly get down to it. Now this is for gold. Okay, so now this is the daily time frame for gold, and here you see this is the daily trend line. This one, that's TL1 D1. Okay, now this is the channel for it. TL1, that's the upper line that makes it form a channel, which is now an up channel. So this is an up channel. So from this daily perspective, we have an uptrend. Okay, now you have the minor trend inside of it, which is this, and that's the 4 hours time frame TL2. So we can see that it's this way and it's tilted this way now, connecting the two tops up here. And so connecting forming this, right? We're still going to switch to 4 hours so you see it more clearly. And then you have the secondary trend here, okay, which is this one, 1 hour time frame, okay, TL1 H1. So that is it. So this is now the secondary trend, which agrees or concurs with the daily time frame. So based on the, if you look, take the bigger picture, or the biggest picture here to be the D1 daily time frame. So we can see here now that the trend is up for gold. Okay, and of course we all know that gold is trending up. But if we switch this to the weekly time frame, we may have a different perspective at the moment. But first, before we do that, let's quickly look at the 4 hours time frame H4. Here is it. So now, what you have here, this is the F4, the 4 hours time frame here. This is it. This is the 4 hours trend line. So, and the 4 hours trend line here is that you can see the join of this top and this top forming, and this two forming the downtrend line up here. That's H4 TL2. So H4, then this is the channel, down channel. All right. So now you have, if the 4 hours time frame happens to be the biggest of the time frames, that means that we have a downtrend, but you know it is not. So what do we have here? You see that you have the H1 here. That's the for 4 hours now. This will now be the minor trend. But if you look at from the daily time frame, the 1 hour becomes the secondary trend line. So meaning that based on this now, also there's a pullback here. So what's going on now? So one could begin to walk around making entry here based on the formation of this hammer around this 1 hour trend line, which is the secondary trend for the D1. Okay, so now remember that this SF trend line is a dynamic one, so you don't need to draw it. All you need is just to install it and then allow it to populate, price to move, and then it will adjust and then begin to give you the various trend lines: minor, primary, secondary. Now let's quickly look at the weekly time frame. Now on the weekly time frame, you can see that based on what's happened so far, from here, you can see that temporarily we have, this is the weekly W1 week one, okay, WK1. This is it. So this is the channel we have up here. Yes, the market is in an upward move, uptrend move. However, in the interim, there is a downward channel on that up there. Okay, so now let's look at it here. Now you can see that's it. So after that, you see that after a move down to this point, there is a pickup from the daily time frame, which is the D1. Okay, so which will now serve as a minor trend line for the weekly time frame. But overall picture, now I'm not sure there's no M here, which is the monthly time frame for the trend line here. So that's why you will not see any M here now. But if you now look at the overall picture for gold, you can see that based on this, gold is actually upward bound. What's just happening now is a retracement. Okay, so but because the SF trend line does not include the monthly, so the monthly would have actually given us a monthly perspective to it, which could have would have proved that the the weekly is its own minor. So now overall, if you now look at the picture, so that's why you can also bring in your senses into it, bring in your own perspective into it. Impose the chart on the market. So based on what we have here, now you can see that this is the year 2019. This is the year 2018. You can see that there was no much massive move in 2018, 2017, 2016, and 2015, 2014, and then if you come down to 2019, you can see it began to pick up. So from here, the market structure here shows us. You can see the structure here low here. You can see the another low here. So if you now look at between 2015 and the current year we are in, which is 2021, that the lowest between that period and now has been in 2015, which was around December. So that's the first structure here. So you can see under low here, which is now in 2016. Okay, under December, under low here formed here. So we now have a higher low. So the structure here is showing us that uptrend is picking up. Okay, then you come to 2017. In 2017, it couldn't give us a bottom beyond what it gave us in 2016. So down in 2018 around August, so we have another low formed. So if you see this, you see now is a higher low again compared to 2016 low. So 2016 low that was formed as in for this structure formed between 2016 and 2017. So that's the structure, that's the market structure that we have there too. So based on this, now you have higher low to this, higher low to this. So then you come into 2019. Here's another one here. So the market retraced here again and then formed another higher low. So and then we got it shot up. And so towards the end of the year, it tried to come down and then made this low in early 2020 and then push back up. So what we have got here now, so there is another pullback here that came back here, formed another structure here, which is this year 2021. And so you can see that there. So you can see that it's picking up again from around here. This one, if you look at this type of this is a D1. So that's still the one that is still pushing it around here. So if we go back to weekly and daily, you can see that the daily time frame one and the weekly time frame two. I'm sorry, the hourly time frame, they are all pushing it back up, syncing it as in agreeing with what the monthly chart gave us. So what we have got right now is that downward movement or downward channel now is a minor trend, while the primary trend is upward, and the primary trend here is what is happening here. The 1 hour is picking up now. So okay, so by the time the day is over, go to the daily time frame now. By the time the day is over, okay, whatever it gives us here now around here, because this is a critical point. So when you use this tool, it's going to really help you to make informed decisions. And listen, please, when you are trading, okay, do not be in a haste. Do your proper analysis, do your checks. This is just one of the things you check. And that thing is a trend, and then plus other factors you consider. And out of maybe 4 or 5 factors, if 4 out of 5 are in place, take the trade. But if it's more than two is too much to ignore. Okay, so out of 4, if 3 factors are in place, take your trade. But if it's more than that, 2, I think you should wait. Okay, that's uh, my strategy. Okay, so and if you could adopt it too, it might be of great help to you really. So that's how the SF Trendline helps you. So to get the SF Trendline, I think you will find it in one of the courses that come as a bonus to the Digital Forex Profit Blueprint, and you could get it there. Of course, you will learn a whole lot inside those packages. You have the Forex Freedom course, you have the training key levels, and they are all packed in there. So I wanted to play around this and see you in the next video. Thank you.